Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Aaron Lawson-Clark of Mercia Asset Management to talk about the Northern VCTs. Hello Aaron, firstly tell me about the Northern VCTs and then also give me some information about your own background.
Good afternoon. The Northern VCTs are part of Mercia Asset Management, which is a PLC listed on the London Stock Exchange. We have circa 900 million under management as a house, and that is across 8 regional offices with circa 100 investment staff and support staff. The Northern VCTs themselves have circa 360 million under management. That is broadly distributed with 40% of the invested money, which is 250 million, into some of our legacy portfolio, which is more established businesses, previously management buyouts or later stage growth capital funding, 55% into post VCT rule change, early stage, mid stage growth companies, and circa 5% in quoted assets. We are a generalist fund, investing across all sectors, but with some in-house specialisms too. My background, I'm an investment director for the fund. I work out of the northeast of England. I lead an investment team in the north, of which there are 4 of us, investing right across the UK, but particularly making sure we're across the northern regions. My background before being an investor, I did 10 years in corporate banking, largely as a technology banker, working with technology companies mid to late stage, but I also have a bit of a diverse career where I worked for the Foreign Office and the Inland Revenue in the past too.
And what companies are you looking for in the VCT? What type of companies?
As I said, we're a generalist investor, but the companies can range from life sciences to software businesses to engineering businesses to consulting businesses. So we are open for opportunities across all range of sectors. However, the key things that we look for are good management teams, experienced management teams, sectors with strong growth potential and proven growth in the business, so proven commercial traction. And then overall a team that we can work with that we think we can build value together.
And there are any type of companies that you avoid?
Not really non-VCT qualifying, clearly. And then we tend as a house to prefer companies that can demonstrate good capital efficiency and an ability to grow with the levels of capital that we can provide as a VCT house and not have to rely too much on further external capital unless it's the right thing to do.
And when selecting a company, obviously the management team is very important. What do you look for?
Management teams, firstly, it's experience. If you have an experienced team that have been there, done it before, that's fantastic. Secondly, the ambition, the passion for what they're doing. It is a hard road sometimes growing these early stage companies, and often it involves pivots, often it involves challenges. So a team that can navigate some of that is very helpful. Depth in the team, so a range of roles where people can pick up and be able to scale businesses of this nature. And then probably the last thing is a collaborative personality. Because of the challenge, sometimes growing early stage businesses, you need to be able to work with these people and have great relationships, and that's really important to us too.
And what are the red flags when it comes to the management team?
It varies, it's deal by deal, but often where there's too much autocracy in a management team, so kind of chain of command where there's only one person, that can result in failure. Potentially that person can be challenging in terms of working with them to build value in the company and to make decisions as a board, not as an individual. But otherwise, we're receptive to try and work with the teams, and first time founders is fine with us too if it's the right people, the right personalities.
And previously Northern was very much known for management buyouts. How different is what you do now?
Yeah, so the fund was known for management buyouts and change in ownership, which largely involved businesses that were over 1 million of EBITDA, so much more mature businesses that still had growth potential, of course. There wouldn't be an investment case otherwise, but these businesses were mature and proven, The difference is we are looking for the businesses that will next look like that now. So we are trying to build the businesses into the kind of shape that we previously bought businesses. Now, actually, a lot of the things that you look for, great management teams, good markets, good growth potential, defensibility in the product, good industries, are actually the same. So we're looking for some of those same cues. Now, one thing that we can do is look for good commercial traction, because that can provide the springboard for growth. So we look for businesses that can demonstrate that, so that we can reference those customers, the product that's being consumed or the service that's being consumed, and build a scale-up plan around that.
And to give investors an idea of the types of companies you invest in, can you talk about a few recent investments that you've made?
Certainly. Yeah, the first one is a business called Oddbox. This is a fruit and vegetable delivery and subscription service. It is a business that specialises in sustainable fruit and vegetables, so a product that might otherwise go to waste. And we backed this business in March 2021, just prior pandemic, and we backed it because there was a stellar founder team, and they had demonstrated great economics in beginning to grow a consumer business in the south of England, and we backed an expansion plan of that. And that's a business that has performed very, very well post-COVID, and it's one we're quite excited about. So the others that we've backed recently, a business called Moonshot. Moonshot is a technology consulting business for cybersecurity and extremism. Moonshot was a business with a founder team that had built a credible, sizable business without any investment prior to us being involved, and had quite an exciting plan that we're now on to build more of the technology out, to productize increasing parts of the business, and to take the business further international.
And what about some of the older holdings in the portfolio?
Yeah, so we've had a very good recent period with the older transactions, the legacy management buyout deals. So Agilitas is a business which is an IT hardware management business, and we've recently sold that business to Purwin in a secondary transaction, making a money on money multiple of 8 times our money. And that was a business that experienced some very strong growth pre and post pandemic. So it's sustainable, resilient business. Another in entertainment, Magpie, Music Magpie, which in April 2021 successfully IPO'd, realising a 6 times return on day one, and a potential 11.7 times return if you include the rolled shares that we rolled into that transaction. That is a business which does recycling of electronic products and other products, direct to consumer. Again, fantastic success story in terms of its performance. And then finally, another realisation in the portfolio, It's All Good, which again was trading very well. This is a consumer brand, tortilla chips and other snack products, both white label and private and owned label. The owned label is Manamasa, and we sold that business to Valio Foods in a trade transaction.
And how's the pandemic been for you?
The pandemic's been very interesting. It has created challenges for us operationally as a manager. How do we stay close to these portfolio companies, or closer than we ever were? How do we help them navigate through the challenge? The benefit of having a generalist portfolio is that you have exposure to lots of different sectors and lots of business models. And generally, our portfolio's held up very well through the pandemic. That's through some close management from us, but from our management teams performing very well. If I was to pick some highlights, the consumer side of the portfolio, as a generalisation, has performed very strongly because a lot of the move to digitisation and digital models for consumers has only accelerated as a result of the pandemic. Our business-to-business software and other services businesses generally have also held up very well, and all typically demonstrated some good growth. They have had some challenges, but not that isn't navigable. I guess the areas where there may have been more challenge, the leisure side to people's portfolios, including our own. Clearly, the pandemic's prevented people from getting out and getting into some of these businesses. So those businesses have been in semi-dormant states. But we see a very bright future for those businesses as things open up and as some of the market changes in terms of the participants who can't survive.
And what else do you bring to the equation as a Northern? What do you bring to companies other than money?
Yeah, I think that's a really important question, and it's one we get asked by the portfolio companies more often than not, because there are other managers out there. And my answer is that we bring a passion to support the entrepreneur to grow the business, and we do that through a variety of different mechanisms. We do that through expertise, to bring additional non-executive directors, consultants and other experts to the table to help the businesses grow. We do that through best practices. So as a fund and as managers, we experience businesses across all sectors on lots of different growth plans, and we can inflect some of that knowledge into those businesses, be that KPIs, be that performance management, be that other mechanisms to help those management teams deliver the plans. And then Mercia as a group has helped us because we have the ability to access additional resource from talent managers to digital marketing and marketing experts. And then finally, Mercia have other funds under management in addition to the Northern VCTs, which is very helpful because it allows us to fund other business objectives within our VCT assets as well. It may be that we need an exit for an earlier shareholder that another of Mercia's funds can support, or it may be that we want to go on a buy and build or an acquisition strategy, which we can do with other funds under management that we can't do with the VCT funds.
And how has the VCT performed?
The VCT's been performing very well. The VCT this year has been declaring special dividends. Our intention from a dividend policy perspective is to pay 5% of NAV on NVT and Northern 2 and 4.5% on Northern 3 for the foreseeable future, subject to ongoing realisations in the portfolio. And then from a special dividend policy perspective, where realisations allow, to provide a blend of capital and income growth by dividending special returns and retaining some of the growth in NAV to improve the net asset value of the funds, so to provide returns on both fronts.
And finally, for those people looking to invest in a VCT or VCTs this year, why should they choose the Northern VCTs?
Yeah, you should choose Northern because we have a long track record of successful investment processes and people to generate high quality returns. And additionally, we have a diverse portfolio, including a legacy portfolio, which should support short-term dividends through realisations as we establish an exciting portfolio of growth companies.
Aaron Lawson-Clark of the Northern VCTs, thank you very much.
Thank you.